All right. So let's look at this from here, Grant. So I'm going to start this out in a really, let's give people a little bit of juice, right?
Let's do it.
What did you buy and where?
All right, so I bought a standalone house on its own block of land, 4 bedrooms, 2 bathrooms. It's got a front yard and a backyard, and it's in WA.
Do you think a lot of people that's all they want to hear? That's what they came from?
No
numbers yet. No numbers yet.
I know the second question they want. Where?
I'm trying to bait this, right? We'll share all that later in the episode, but you've got to listen to the whole episode for that to get that juicy stuff.
Dun, dun, dun. Yeah.
All right. So the next question I'll ask around that is like, well, why this? Why did you buy it, and why this type of property?
Yeah. So first and foremost, the reason that I bought it is, for me, I've got a good amount of cash, liquid cash, sitting in bank accounts over and above my emergency fund. And I personally believe that it is not going to be the greatest use sitting in a bank account. And so I'm looking at going, well, in the current environment we have, what is going to be a great asset for me to purchase? And property is one of them. So that's exactly why I said I'm happy and I've got the buffers to weather any storm. And so then I'm like, great, I've got 20% deposits. I can go and pay for the thing, do the thing, and it's ready to rock and roll.
Did you have those rules in place prior, or are these newly adapted rules?
No, so an emergency fund has been in place forever. So emergency fund is just like, imagine I didn't earn anything or something like, I don't know, imagine all my tenants just left. Like, how could I just go and pay for the properties and all those kind of things? The emergency fund's always been around, and it's in 6 figures. And for me, 20% deposits has always been my benchmark on every single property because, you know, Charlie, the property prices go up and down like 5%, 10% here and there. Like, I just never want to come close to a wipeout event or the bank knocking on my door saying, hey, can you go and put some more cash in?
So you've played by your rules then?
I have. I've been it's actually been quite challenging because I kind of put foot off the accelerator in 2022 when rates started going up. And this is my foot back on the accelerator.
Because you have played by your rules here, did it give you extra confidence in making the purchase?
Totally. You know how many people are like, why are you buying again? Like, rates are going up. Even my lawyer who was signing documents are like, you understand the risks here, right? Genuinely like concerned for me. He's like, yeah. And I'm like, it's fine. Like, if it drops, it drops. Like, trust me. He's like, great. As long as you know what you were doing.
Can you please do this for me? Next time someone says that to you, right? I want you to go like this when you go, you understand you're putting your limited beliefs on me. You understand that you're not in my situation, and because of the situation you're in, you're opposing your opinions and views on me. I think what you mean to say is that buying property is risky for you.
You know what? I concur with what you're saying, but I want him to sign another document later. So,
yeah, you absolutely shouldn't say that, by the way. No, but this is what you got to be careful, right? It'd be easy to be influenced by your lawyer in this case here, like someone he's a confidant, right? Totally. Someone you trust,
yep.
And yet they're saying that type of thing. Really easy for doubt to creep in.
Totally.
Got to follow your own plan. Got to have your own rules. Got to get your own advisors and things to make sure that it, potentially the greatest time ever for you to buy property.
And that is the component. And so for myself, like when I was sitting there, and I remember talking to you about it, the second I'm like, that's it, Charlie, I'm going again. We literally had that conversation. I was like, dude, I'm like literally, there is nothing I'm more certain about than this is the perfectly right time for me to go again based on where I'm at and where I think this thing's going.
How exciting. I am excited for you. I think it's a very fun thing. And to be in similar context, I had similar conversations when I was buying during the pandemic. When we started loading up, I'll say similar circumstance, different but similar circumstance, right? Where it's like people were really like, oh crap, what's going to happen here? Is like you got to be very careful of the advice you take on because it's easy to knock you one way or the other.
Totally. And yeah, like it's been really interesting, especially when you hear investors that I know and love, like on YouTube, and they're just like, it's like recession, like everything's doomed, everything's going to tank, and I'm sitting there going, I'm going to buy another investment property because
this isn't keeping me up at night at all.
But that's why, like, to the extent that if I was more aggressive, I would have pulled the trigger a couple of months prior. But I was so risk adverse that I'm just like, cool, let's just stack some cash. And then it's just like this smooth little gradual push on an accelerator. And let's just go again. Like I almost waited too long, in my opinion, because I just wanted some more buffer just in case.
Can I ask you a question though?
Do it.
How much sleep have you lost?
None.
Exactly. That's what
Sleep
you're
like a
paying
baby.
for.
Totally.
And
Sleep
I
like
think
a
this
baby.
is the point that is so critical here, is the idea that when you do follow your rules, when you follow your plan, when you have, almost in your case felt like being too conservative, no sleep lost.
Exactly.
When you break the rules, potentially get excited when Grant's buying property and be like, oh, maybe we should get one too.
FOMO.
Not naming anyone, but it's like that. And then you do it, that's when you feel guilt, remorse, sleep at night factor. All the news starts to affect you.
Yep.
Your psychology ends up messed up. And then before you know it, you're selling your crypto at 50% of a loss. Again, not naming anyone.
I was going to say, thanks, Charlie.
So I think that's really cool. So in the idea of this, how does this property fit into your bigger plan here? Because I doubt you're just like, let's get another one.
No, it was basically that. No, it's the way that it fits into the plan. So our goal has typically been cash flow. So I want to go and hit 120K gross cash flow or net cash flow from a property perspective, gross from my personal income a year from the property portfolio. However, this one is actually focused on growth. So
Ooh.
I thought you might like that one.
Why?
All right. So I have had our buyer's agent look at other properties for me to potentially purchase that were high yields, Charlie. And comparative to the financing that's available, like it's just not a good deal.
Hang
Like
on, so the cash flow isn't cash flow?
it's not cash flow positive. And I'm like, if I'm foregoing growth for high cash flow, which means I could get one or the other, imagine like it was that firm, I'm like, the benefit's not there unless it's like paying for itself. And so I've gone the other way on saying, that's fine. I now know how to play this game. I will go for growth because I think, in my opinion, again, not financial advice for anyone, that is where a good opportunity exists because there's not as many, in my opinion, there's not as many investors looking around for negatively sort of geared properties, albeit I'll talk to you about how I'm approaching that in a second. And I think there's going to be some huge growth plays in some very upcoming suburbs. And so I said, I think this is the way I'm going to play it, where I'm going to utilize growth through equity as opposed to cash flow positiveness.
I love this. You've been what I'll call tactically and even a little bit strategically flexible, still going for the North Star, right? The goal hasn't changed. It's just because the environment has presented other things.
Completely.
You've decided to be adaptable rather than remaining fixed.
Yeah.
Like, I can't remember who originally said this, but there was a guy that said, I reserve the right to change my opinion at any point, and then my activities based on that. And I just think that is such a powerful mindset as an investor, because if in your case here, I'm only doing cash flow properties, the environment always has to support that. Interest rates have to support that. When it doesn't, what do you do?
Yep. And then, correct. But it's like, it's still heading to the same direction, same outcome. Like I'm still going from Melbourne to Sydney, but there's just different freeways and back roads and everything like that I can take. And it just looked to me that one of the freeways was blocked. So I'm like, that's fine. I'll just go over there. Like, it's just, I'm not firm on that freeway. I'm not going to wait until that thing's unblocked. That's fine. I'll just go a different way.
So what does that mean for you? You've potentially bought a growth property here that you may sell this one down in the future to pay off a high yielding property to jack your cash flow then or something like that.
Exactly. That is exactly where it's at. So it's the end game just slightly tweaks for this particular property, but it fits inside the overall strategy of just going, well, that's the goal. I can just get there a couple of different ways. So yeah, sell it down at some point, pay down debt on other high cash flow properties.
Now, you kind of hinted at this one, and I maybe should have asked this earlier in the conversation, but it sounds like you're using a buyer's agent and you've got your team in force. You're not picking properties yourself.
Yeah, totally. So I got buyer's agent in, I got accountant, all connected. I've also got mortgage broker, who we've spoken to quite a few on this podcast.
Awesome. So same team, no changes to the team?
No team, no sub-ins, nothing, same team. They're still going strong.
Have they performed well?
Yes, although our bank's not performing very well. But bank's like kind of like an extension of one of my teams.
All right, so let's rock into another one. What number purchase is this for you, just for context?
So in Australia, properties in Australia, this is number 4.
All right, number 4. Wow. I dig it, man. All right, let's go into some of the juicy stuff now. How much was it?
All right, it was, dude. So here's another thing that was crazy. So they were looking for offers above like 500, and we actually, dude, it was a buying frenzy. Like it was insane, and I just wanted to mop the floor with everybody. So we got it at 530. So we actually paid above what it was asking. Like,
was that the strategy? Go in with an above offer so that you just get top of the pile?
Dude, places like houses coming up for sale in this location were like disappearing in days, like single digit days. And so it was either like you going in there to mop everybody else out, or someone else who's got like a killer relationship or some kind of in or something like that will just take it from you.
So what was it? What was it listed for? 500.
500. And so it started like offers above.
Right, one of those ones.
One of those ones, the option.
Have you ever thought about this though? If you're buying a good property, like what's 10 grand in the scale of things? Or 30 or 50?
And that was the thing. And I looked at this, I'm like, this thing is freaking pristine. It is an amazing suburbs. Like it is just incredible. I'm like, I want it. It's going to add value to my portfolio. Who cares about a couple of $1,000? All right, fellow property investor. If you loved the value from this short video and wanted to know more about how you can win at property investing, check out the full episode by clicking the link on your screen or in the description right now. Alternatively, click subscribe and you'll never miss another one of these videos.